Good morning. It's Talking Bull Signal Centre. Today's Wednesday, I think it's the 8th today. Yeah, 8th of
It
June.
is.
It's Wobbly Wednesday. That's what I've entitled this show. Not for any
I like it.
reason. Just want to sort of like get people thinking, really. How you
Nice.
doing, Jamie?
Yeah, not too bad actually. Not too bad. I'll be honest, I'm feeling very sore. I've tried to get back into the gym, and it's reminded me why I don't go to the gym because now I can't move, and I think it'll be like this for the rest of the week. So I will be sitting in my chair for the next 5 days.
Yeah, not a surprise. When you get to my age, every time I go to the gym, I get injured. So it
Really?
isn't. It can't be good for you. Yeah, I feel really rough today as well. Just like this, can't shake these flu-y symptoms off. But it's quite nice. We can still do the shows, and
Yes,
then I
we
can sort
can.
of like collapse in a heap
Yeah, we'll push through.
afterwards.
Yeah.
Yeah, but okay, let's have a little look at today's headlines. Here we go. U.S. inflation concerns resume. Now, in comments Tuesday, U.S. Treasury Secretary Yellen stated that inflation was unacceptably high, with supply side difficulties continuing. Not much of a surprise there. US Treasuries hit selling interest on rallies. Moves in US bond markets have continued to have a crucial impact on assets prices during the past 24 hours. The 10-year yield retreated back below the 3% level, quite a pivotal level there, with lows near 2.95%. But there was selling on rallies, and it yield moved back to 3% on Wednesday. Federal Reserve will stay silent, will remain in the blackout period ahead of the June the 15th policy decision, with a lack of guidance continuing to contribute towards the volatile conditions. Really not giving us a lot of help there.
No.
Yen warnings have little impact. Japanese Economy Minister Yamagiya stated that he was closely watching the impact of forex moves on the economy. The yen did correct stronger as US yields declined, but was a fresh yen selling in Asia as US yields moved higher again. And the SNB stays out of the market. Swiss sight deposits declined to 750 billion Swiss franc in the latest week from 754 in the previous week, which suggested the National Bank had not been intervening in um, to restrain the Swiss currency. So not anything going on there. Let's take a look at the markets. Let's take a look at the technical analysis. I'll dive into the Bitcoin first. Let's take a look at that because I was a bit on Bitcoin's case yesterday. I think we can see it from the daily chart. We're getting this volatility. Let's try and make it a little bit clearer on the chart. So let's take a look at this. We're getting flows, two-way flows, rejections in both directions. For me, this is building into a bearish flag. So if I get my parallel channel, for me, that looks pretty much like we're setting up for a further downward move. Resistance coming in at 32,950. That was a swing low from the 28th of Jan. This is all on the daily chart. But yeah, continues to test this 28,000, 29,000 support level and seems to be holding so far. So that's a positive, maybe. Short-term charts don't look fantastic either. Just looks like we're in a bit of a sideways trend, and we've got this downward trending resistance on the 4-hour chart, which should cap gains as well. So can't see anything, although we've had a bit of a rally in Bitcoin, can't see anything nice, or can't say anything nice about that. So let's take a look at FX. We skipped this yesterday, which was really naughty. Joe will be fuming. And yeah, well, what did we skip? We saw a nice little rally off the lows in Eurodollar. Eurodollar got support down here at the, yeah, my chart seems to be sort of not really seeing the levels here. Really strange. 106.33. Resistance coming in above that, 107.75 to 107.85. And we saw a bit of a bullish hammer yesterday. So this was euros getting sold and they fought back towards a close. We started off the day on the back foot. Let's see how that plays out. The dollar index saw this shooting star type candle. It retreated from the 21-day moving average, and that's potentially a sign that maybe we've got a little bit more on the downside in the dollar. However, we do have this rather nice looking bottoming formation after the exponential rally we've seen over the last 6 months. So still potential for further upside, I feel there, although yesterday was a bit of a setback. Cable, again, pretty sideways. We're getting ebbs and flows both ways over the course of the week. And again, there's no real sign of a trend, just choppy price action in cable. And dollar yen, that extension higher continues. Yen continues to get sold. So let's take a look at maybe a longer term chart on that to give us a little bit more, not far off a significant previous high, swing high. That comes in at 134.93, which currently trading 133.25. So not far away. That will be a definite test of whether we're going to continue higher or not. Jumping from there, I'll jump into take a little look at indices. Indices continue to baffle me, really. We still have this dip buying situation going on this week with inflation, interest rates, everything else like that sort of in the background. I can't really see the value, especially on a weekly chart. If you think about the prices where we've come from the swing lows at the start of the pandemic, even now, we're still up about 82% from there. So pretty much very confusing. Let's leave it at that. On the NASDAQ side of things, we've got, that's more technology based. Jamie will jump into it, maybe show us a heat map on that in a little while. And we have stalled this week. We've stalled at a resistance level 12,924, and currently in forming a bit of a doji. We're a little bit higher on the start of the week, but we've really sort of like dip has been bought and the rally has sold. So not really a lot to report on there. On the commodity side of things, gold continues to tread water. Doji candles on the weekly chart. Let's take a look at the daily chart. And again, I think this is part of a corrective, downward trending corrective channel, and really sort of like trying to break up through resistance here. That comes in at 1875. Support below 1828 before the 1787 level comes back into play. Still feels a little bit on the back foot with potential for further dollar strength, especially if we get some sort of aggressive rate move from the Fed. And crude oil, finish off with crude oil, continues to look bullish. We continue to move higher, still hanging around close to the 119, 120 level in WTI crude oil, and dips continue to be bought. Looking at the short-term chart in here, we can see it a lot more clearer. Dip sport, dip sport, dip sport, and that continues. Resistance coming in there on this chart, 119.07. Support at 115.64. So yeah, positive looking, and we've got oil inventories out later as well for oil, so that should give us a little bit more volatility, and I'm sure it'll probably be a little bit of the same. Any dips that may occur from the oil inventories, the figure will probably be bought into. Jamie, over to you.
Thank you, Steve. I will quickly share my screen. Here we go. Right, we'll start off as usual with our biggest gainer and loser of the day. Our biggest loser for yesterday was this. This is boxed retail trade, internet retail. It doesn't matter what type of retail it is. It's down 35%. This really fell off a cliff actually. The previous day's trading, it was actually down quite considerably too. So if you take the low from a few days ago, it was actually down 20% yesterday. The day before yesterday. And then yesterday it was down another 35%. So the total decline for the 2-day period is closer to 50%, which is pretty rough. So let's jump in and have a little look, see what we're seeing. Shares were down 37%. Nothing too much there. Doesn't look like we're going to get too much information. What about here? Said its stock will be added to the Russell 2000. Oh, this is a bad time for that. Really bad time. Probably not what you want to see if you're bullish on Boxed, down, like I say, 50% in the last 2 days. So a rough old time. On the flip side of that, we've got AERC, Aero Clean Technologies, which was up 150% yesterday. 154% to be precise. And again, this is off the back of a really big move the day before. And you can see here, I mean, you can barely see actually, but if you look at the volume at the bottom, you can't even see what the previous kind of day's volume were, because it's so minuscule in comparison to the volume of the last 2 days. So on the 3rd, we were trading at an average of about 63,000 shares. And then day before yesterday, it was 3.5 million. And then yesterday was 71 million, and then yesterday was 121 million. So let's have a quick look, see if we can find out what happened here. AERC companies, AERC nearly doubled late Monday. Okay, so that's on Monday. After US FDA signed off on its medical grade Pergo air hygiene technology. So those FDA sign-offs are giving it a really big boost. Wasn't looking too hot actually before this, but obviously when you do get a big piece of fundamental news like that, it can really change the trajectory of a stock. So a nice 154% move. Let's actually see, what was that after as a 2-day move? That's 430%. So would have been a nice one to be on the right side of that. Let's jump into a quick heat map. First, looking at the S&P 500, and it's mainly green actually. We can see across the board. We're looking at the big stocks as usual. Apple up 1.76, Microsoft up 1.4, Google's flat pretty much. Amazon was slightly down. Exxon here, you can see, what's that, Exxon Mobil, I think, up 4.5%, so that was a really nice day. Nothing else really of note. Tesla was pretty flat, but overall a pretty positive day. Let's see anything stand out on the NASDAQ. We've looked at some of the main ones. Nvidia was up almost 1%, Facebook was up almost 1%, so a pretty good day. What's this down here? AZN up 3.24. Love to see it. Have a quick look. Maybe look at Dow Jones. Why not? We're here. Same kind of story. You can see the big ones there. What's this? Walmart maybe down 1%. So overall a pretty strong day in the indices as we looked at. Jumping into a couple of the specific stocks, we're looking at GME again because it was up another 14%. It seems to either be up like 10% or down 14% or up 20% each day. It really is still moving quite a lot. But what we can see significantly about this for me is that this daily close here is above all of the previous kind of wicks and highs. We just didn't manage to completely take out the high of the 26th, but with this increased volume and closing above the past 6 days trading, that to me is still a really good positive sign that dips is still continuing to be bought. Looking at this on a 4 hour, you can see we did close above all this. So that is a positive sign for GME, which was up 14%. Similarly, AMC, off the back of, I guess when one does well, the other does well, was up 9%. It doesn't look so significant, but 9% is obviously a pretty sizable move. We're still kind of trading around this resistance level. We tried to break above it, but we did that was a bit of a false breakout. And maybe now we get another attempt at trying to break through this previous support level at about $14. What else do we want to take a look at? I think I want to see Alibaba. Yeah, that's closed above this resistance here. It does feel a bit overextended on this up move because we've been, since the 25th, we're up 26%, which is obviously a really strong move. We haven't really had too much selling pressure. We have had down days, but nothing I'd say that can kind of really constitute a proper pullback, just a bit of consolidation. So it does feel slightly overextended, but we'll see how if this can follow through today. Perhaps we get a bit of a move, like kind of get a bit more of a breakthrough, retest this level, and then we kind of come back towards these previous highs here. That's what I'd like to see on the bullish side of Alibaba, which has obviously had a really tough time over the past year or so. What else do we want to look at? We looked at that. Amazon, looked at this yesterday. Obviously, we had the stock split. We've got this. This is a bit of a, what would you call it, Stephen? Abandoned baby. We've got doji as well.
Whereabouts? Just that.
Just here on the end here.
Yeah, I mean it's quite a classic, because it's sort of like there's a couple of days before it sort of crosses over. Yeah, it could be, but that sort of like the green candle sort of like offsets it a little bit. The previous green candle, the big one. Yeah, that's sort of like if that formation had taken place above that green candle, yeah, that'd be an abandoned baby. That'd be a really bearish looking formation for me. But I think it's, you could still sort of say it is the same. There's lots of gaps on that chart, which prices tend to fill gaps, but there's gaps both ways. So
there are. Yeah. I mean, I think the significant gap that he's filling is this one here, from the 28th of April to 29th, which was off the earnings miss. But like you say, I mean, it's gapped up pretty much every day. It's very, very gappy. So yeah, I mean, we'll see. This, like you say, if we didn't have this candle here, this would be a very bearish formation. But it'll be certainly one to keep an eye on. We'll see if we can get any follow through on the upside. We have obviously had this really nice move on Amazon for the last week or so. I think the next logical target though is still this this 50% fib that we've got drawn here from the recent high to the recent low. That also coincides with this previous support level, so I'll be looking at that as a really key level if price were to get there. What else have we got? Nothing to say on Coinbase really. Target was down pretty hard yesterday, but actually did get bought up through the session. You can see the volume was much, much higher than it has been. So it actually gapped down and opened 6% lower. And I did see what the news was on this, but let me get it right. I think it was on some guidance, actually. Let's see if we can find it. Target cuts its quarterly profit margin forecast and said that it would mark down prices in the second quarter in a surprise revision that sent shares falling 2.3% lower. But it did get bought up. So we're now getting a little bit of a support base. Here we go. On a short-term level, we're getting this support coming in, and we do have a bit of a resistance too. So we kind of are a bit range-bound on target. Look at that. I've got a big $215 sign there. That's good.
No.
We'll get rid of it. It's gone now. We obviously have this huge gap here, which, I mean, could be filled, but we'll see. We'll see if that happens now. We've got gaps that go back here as well. You can kind of see there's one off of earnings back in at the end of 2020. So that's a fair way down, but we'll keep an eye on that. Last one I wanted to check was EasyJet. A lot of flights being cancelled with EasyJet at the moment. Luckily, mine wasn't last weekend. But we are around this key support level. I'll bring it back to a daily chart. At this key support level, which prices kept on finding support. You can see 1, 2, 3, 4. And then yesterday, it also found support on the 5th day. Today, we are selling off again. So where does this leave EasyJet? I mean, we can actually extend this out even further. Price has really found this level interesting, this 484. The next level for me, let's bring out to weekly, I think, would be these lows around here. Let me get the horizontal ray. Kind of these lows here. And if that were to fail, we've got a lot of interest in this 389 level, slightly lower. So price action isn't great, though, for the moment on EasyJet. Okay. So yeah, we'll leave it there. But yeah, not looking so hot. I think if we get a weekly close below these wicks here, certainly a retest of 417 would be likely, in my opinion.
Excellent. Thanks, Jamie. I just wanted to sort of cover off. We've had a question about sterling dollar looking bearish, so I just want to dive into that a little bit, maybe clarify what we can see on this. So weekly chart, we saw a very bearish candle last week. Didn't quite close below the previous week's open, so saved a little bit there. And this week has bounced back. On the from a sort of like bullish perspective, the daily chart looks constructive, but we really need a clear break of the 127 level to make me think that we've got potential for the upside. You can see an inverse head and shoulders forming here, but we haven't formed it. It hasn't broken the neckline. I'll remain bearish on this. On the 4-hour chart, you can actually see the opposite type of formation, a head and shoulders formation, which is a bearish looking one on the 4-hour chart. And again, really you need to see a break of the 124.30 level to sort of confirm that. So yeah, I mean, could consider this for a gun to head challenge. You can see sort of the hourly chart, how the price action has swung higher, sold off, swung higher, sold off, swung higher, sold off, swung higher. Potential for another sell-off. While the weekly chart is negative, I'd remain slightly bearish of this, but it wouldn't take much to change my opinion. As I say, a break above 127, and then there's potential for further upside. Okay.
Very nice.
Yeah, taking a look now, gun to head challenge. We're not doing very well, Jamie, are we?
Oh, we're letting the side down, honestly. It's been a bad week.
I know. Yeah, but it doesn't take long to turn it around. You know, you can sort of like, because you have risk reward management attached to it, then it's always good to sort of like, you know, you can go 2 or 3 days without a winning trade, and then one trade could get you back on track. Sure. So this is gun to head challenge. This is a bit of fun we have. Normally Joe's with us. We've only got Jamie and myself holding the fort this week. Each of us picks a trade live on air, and we publish it on our TradingView account. Each idea must have a stop and a target, and all trade ideas are placed at market. So it's like we haven't got a choice. We can't sort of say, oh, I'll sell it when it gets here, I'll buy it on a dip. We have to place it at market. So it's very, very difficult to do this. You got, you know, volatility of the intraday markets, which is a lot more than, you know, looking at charts from a technical perspective on a longer term chart. And so really the sort of like the performance shouldn't be that great from this, but we seem to do okay. The trade expires at 9 p.m. or when the stop and target is hit, and we'll there's a performance spreadsheet which Joe will run through next week. I'm leaving it all for him to sort of do, Jamie. I'm not going to start touching his prized possession. Yeah. So have you got a trade idea? I've got one. Have you got a trade idea?
Yeah, I can go. Let me just put it up. Where are we? Oh, thank you very much. Yeah, so I'm looking at the euro against Canadian dollar. Now, it's a very highly speculative trade because it's against the kind of short-term 4-hour trend, which has been moving considerably lower for the last week, 2 weeks. But we are at a pretty key support level, and I just need it to hold till 9 o'clock tonight. So my logic is it will hold. I don't think it's going to hold long term, because if we kind of zoom out here, we can see the trend is definitely bearish and this is consolidation, but I don't care. I just need it to hold until 9 o'clock. So I'm going to hope it does. I can get some pretty good risk reward out of this. So selling the euro against Canadian dollar, we're going to look to sell at current price, which is, let's put this in properly, 1.3401. 3401. They're going to keep the stop. We can keep it probably a bit tighter, actually. Should we go? Yeah, let's keep it 41 to 1. Let's do that. No. Yeah, we can tighten this up, because for me, if price does break below these recent lows, the trade idea is invalid anyway. So I can keep it really tight. Like I say, it's highly speculative. These are just a bit of fun. I'm going to keep the risk reward really good. So we're going to target... what are we seeing here? 1.3521. Our stop's going to be at 1.3377, and that gives us, oh, look at that, bang on a 5-to-1 risk reward. Nice. Yeah, this could well, last time I said this, it went well, but this could well be stopped out in the next 28 seconds, or it could go on and hit profit in the next 2 hours. So we will see. But yeah, highly speculative, but we're going to give this a go today.
Excellent. Thanks, mate. That's great. And I'm going to go short of cable,
nice.
Just based on what I've just discussed. Then the weekly chart is bearish. We're at the top of the range on the short-term chart. I'm placing my stop just above the swing lows that we saw yesterday. Swing highs that we saw yesterday. So just above the 126 level, targeting a move back down to the support level. That equates to a 3-to-1 risk reward level, selling at 125.59. targeting 124.24 and a stop at 126.047. That's me on that gun to head.
Nice, good luck.
Cheers. We'll publish that now. Just a reminder of the day ahead. Oil inventories out at 3:30. Key events over this week. Obviously tomorrow we've got ECB policy meeting, US consumer prices, and the Canadian employment report. So that's it from us. And we will tune in again tomorrow. And yeah,
Cool.
trade carefully out there.
Yeah. Thanks everyone for watching.
Cheers.
Bye. Good stuff.
Got the end of the broadcast.